Hey everyone, welcome to another Density Insights, where we explore a wide range of topics in real estate. In the past few years, the Japanese government has injected a huge amount of capital into the country's infrastructure to support the expected influx of overseas tourists with major events such as Rugby World Cup and the Olympic Games. In addition, there's been a lot of talks about gambling licenses. How are these things impact the Japanese real estate market? In this episode, we've invited Perry Tan to chat more about his view on these events, how they impact the residential market and the hospitality markets. Enjoy. So hey Perry, welcome to the show.
Hey, how's it going?
Hey. Very good, very good. So, it's exciting because I've known you for 2.5, 3 years through our mutual friend, Jeff. And then Japan real estate market is something that a lot of people in Hong Kong obviously interested. And then your background is really unique because not only that residential, you do hospitality, Airbnb, and other real estate type too. So it's good to pick your brain today. And to start with, would you mind telling the audience your background and what you do?
Yeah, sure. So at the moment, I am at Pegasus Capital, and we invest in Japanese real estate. Prior to that, I graduated at the University of Chicago, and then basically had a finance track by working at investment banking and also at fundamental hedge funds based in Hong Kong. And from there, it was a lot of bottom-up analysis, looking at balance sheets, meeting management, and understanding the investment thesis and whatnot. And it was around 2016 that I moved back to my family office. And from there, I continued to make investments in the public market, in the debt space, so on and so forth. And one of the things that I noticed, or what I found attractive about Japan, is that if you buy an asset and you can get leverage on it, you can actually ride a big carry. What I mean by that is that the rental returns are much higher than the cost of borrowing. And in finance term, I guess we can call this free cash optionality. And therefore, we just first purchased a building in Tokyo, a residential building. And then from there, got some bank financing. And the idea was not that noble at the beginning. It was basically to generate free cash flow based on the investments, and then maybe use it to buy stocks or whatnot. But one thing led to another, I suppose. And Japan, we've come to learn, is really, really attractive for an investor. And that rode on and continued to grow. And then now we are managing a fund with both my investor capital and also LP capital. And we invest in, we have been looking at hospitality assets recently.
I see. That's good because obviously it's just I think Japan real estate market has been very attractive since 5-6 years ago. So would you mind telling the audience what's going on in the residential market in Japan, and then how to get involved, and what's your view of the current stage at the moment?
Sure. Let me take a step back and highlight what I think is exciting about Japan. Number one is the cost of borrowing is really cheap. So let's say if the rental returns are 4%, 5%, 6%, the cost of borrowing is only around 1%. So if you can get an LTV, a decent LTV, then it's basically free cash. Secondly, the structural trajectory of Japan, I think in general, residential has been strong for the last many number of years. Hotels until recently is very strong. And obviously, you also have the more mainstream asset classes like logistics or office, which are also pretty strong. And one important thing about Japan, aside from the cost of the low cost of financing, is that you get freehold ownership, which means that it protects investors, even for foreign investors. And because Japan as a market is very yield sensitive or rental sensitive, the fact that there is rental upward risk pressure, right? It means that the capital appreciation potential is high. So your question is about residential, is that right?
Yes, correct.
Okay, specifically for residential, we own property in Tokyo at the moment. One in Shibuya-ku, near Harajuku, and the other one in the Tsukiji area. And Tokyo, surprisingly, has had population increase for the last 30 years. So Japan's undergoing a really strong urbanization trend, which means that if you are from the village and you grow up there, the next thing you want to do is probably to work at a Tokyo, work at a Nagoya, work at a Osaka. These are places which have experienced population increase over time. And that also explains why in Tokyo the rooms are so small, because it's so crowded and packed. And because of this shortage of rooms available, there actually has been really high occupancies in Tokyo, and also rent has been increasing. I mean, that includes the assets and the properties that we hold too.
I see. So how's the experience from the residential market and then make you consider hospitality, which is the journey behind that? And what's your current view on the hospitality market as well at the moment?
Sure. I think when we first purchased residential, it was more about testing the market. We bought in more central locations like Roppongi and maybe in Harajuku. So it was all about location. And we managed to buy a property, an entire building in Harajuku, and we got around a 50 to 60% LTV at 1%, 1% cost of financing, which is pretty low. And from there, we realized that we can enhance the rental return. Back then we were doing Airbnb for some of the apartments, and Airbnb is a tourist trend and all that. And in 2018, there was more regulation for Airbnb, but you can still operate or you can still rent out these apartments as a service apartment. So they call it monthly mansions in Japan. So in the case of Japan, any rental which is 30 days or more is not considered a hospitality or hotel accommodation. Likewise, in the case of Hong Kong, that break-off point is 28. So what that means is if the normal rent is around, let's say $100 for simplicity, using round numbers, then you can probably rent it out to the business traveler or somebody that wants to rent the place at around $160 to $200. So that is the markup, and that is the enhancement that you could achieve by operating as an Airbnb or a service apartment. So how did I get into hotels? I think, because of my public market and hedge fund background before, we managed to talk to a lot of IRs or CFOs and all that from listed J-REITs, and also from budding hotel operators that want to go into Japan, one of which was C-Trip. And we were actually the first the owner of one of the hotels that C-Trip was operating in Japan, the subsidiary. And because of that, they were able to offer above market rental returns because they had cost efficiency in operations. And naturally, because of that, we invested in a couple of hotels in Osaka, and they were the tenant. So one thing led to another there.
I see. And then obviously, right, we cannot deny that the fact that obviously because of the COVID-19 impact, there are a lot of these international things happening. You know, the Rugby World Cup, Olympic game, and then the potential gambling license. I want to talk to you more about that. So how has the government helped the infrastructure, and your view on those events? Like, how much has it helped it? And then do you think that the effect will prolong years even after those events?
Yeah, I think it really depends on the view of everybody about COVID. It's going to be a 5-year thing, a 10-year thing, or a 2-year thing. I mean, my personal view is COVID is a negative event that affects all industries or most industries. But that said, you still have to look at the midterm to long-term outlook of any country or anything that you're investing in. So I think you nailed on the head just now, right? I mean, Japan has a lot of drivers for them, positive drivers for investment and also for tourism. I talked about two already, which is the low cost of funding and the ownership or freehold ownership, right? That's the two that I talked about. And the other things that you talked about is the Rugby World Cup or the Olympics. I mean, with or without the Olympics, with or without the Rugby World Cup, I think it's fair to say that the Japan government has put in a lot of capital to improve the infrastructure of the country in general. So let's say in Shibuya and Tokyo, you're seeing a complete redevelopment. In places like Yokohama or Osaka, you see a lot of capex to renovate or rejuvenate the city and whatnot. And therefore, even for a local, the place is much better or more attractive than it used to be, right? And for the Olympics, for the casinos, I think there are talks about Osaka, Yokohama, and whatnot. I think that's going to be a slightly longer term story, but the story is still intact. What I mean by that is the government's going to spend capital there. The government is going to attract casino operators to come in. And one thing you missed is also the expo that's happening in Japan, in Osaka. So that's in between the casinos and and after the Olympics. So you have all these drivers in Japan. I mean, where the government's willing to spend. And if you talk about guests or tourists that are willing to come and travel, I mean, naturally they'll do the Thailands, they'll do the Koreas and whatnot, but then the interest is really firmly in Japan. And there's so much to explore in Japan aside from Tokyo, Osaka, maybe Kyoto. And repeat guests are quite significant too.
Really? Okay. Yeah, because it's something that like I felt like Japan have get ready for a lot of things happening, which comes to something that I always want to ask you, even as a friend, right? Is that, you know, a lot of people have talked, before the show, we talked a little bit about the hospitality market in Japan. A lot of people want to be part of that. And then how do you suggest them to be a hotel operator or an investor? And at the same time, it's what kind of difficulty is that as an operator and investor that a lot of people don't know about? And lastly, of this whole three-part question is that, you know, besides COVID-19 impact, is it worth investing or being an operator in this space?
Sure. I think the competition has increased over the last couple of years, right? I mean, if investors or your friends came into Japan and made investments like 5 years, 6 years, or 7 years ago, then it's going to be much easier to outperform because you're basically riding the upward wave, right? But nowadays, even without COVID, you're getting more competition and you're getting more upstarts, right? And the general theme that I see for failures, if I may, are hotels or operating businesses that are undifferentiated, in poor locations, and with rooms that are built for the ordinary businessman. That there's zero differentiation, and when, let's say, there's more competition in the market, these guys are the ones that will be wiped out. And we actually see that recently. There's a hotel operator called WBF that went bankrupt recently, and on the papers there's also a brand called First Cabin Hostels. So they do capsule hotels. So naturally, in this case, it's lack of differentiation, and they don't have a product offering. For the hotels that we are operating or invested in, it's more differentiated, either on the cost side or on the design side. On the cost side, for example, we are operating a hotel in Kyoto at the moment, and even at a 20% occupancy, we are profitable. So it means that in COVID environment, we are profitable. And the rooms that we have are around 17 to 20 square meters. So that means that it's much larger than the average business hotel. So most hotels in Japan are actually a really small shoebox for the ordinary person that's going to, traveling between cities to work. That no longer really works. And investing in those assets are going to be problematic. Lastly, about who to work with or whether to start your own hotel operating company. Operating business is a lot of time. So you probably have to be on the ground, or you have to have the right people, or the right people on the ground. If not, I don't think it's worth doing. Rather, I think it makes more sense to work with an operator with some sort of track record, or at the very least, some business sense in design, in management, and also strong with numbers. I think a lot of operators that I've talked to through my investment and due diligence, they only have one, but not all three, and that's where they fail.
I see. It sounds like you need a Superman to be part of the hotel operator, because it is something that's, even myself, right? I think my background before is I'm an asset manager, but I have managed at least try to manage 2 hotels, and then it's just a lot of work. I don't know how to do it. And then, and obviously we talked about COVID a couple of times. It's something that I want to ask you because, you guys sounds really good, doing really well. So during the COVID-19, how the government is helping you guys, and then how yourself mitigating the risk during a time like this.
Sure. So at the moment, we have Airbnb and also hotels and service apartments. And I guess the government has been supportive on in terms of having subsidies. Right, I think that's similar to you know this better than me, but I think it's similar to that of Southeast Asia or maybe in the US. So the subsidies we have are work from home subsidies, IT and telecommunication, teleworking subsidies, and also a COVID loan, a zero interest loan. And if you want to take it a step further, you can probably borrow around 50 to 80 million of low interest or principal only repayment loans. So the banks have been quite easy, or they have been relaxing their requirements. So therefore, you can cover staff costs, you can cover equipment costs, and you also can lend you can borrow money from the government or related banks at a very low cost. So that's why you don't see that many bankruptcies. I mean, you do in Japan, you do see bankruptcies, but it's not to the level of the US or maybe Europe.
I see. And then, so, go back shift a little bit, right, on the Airbnb side, right? I was just wondering, right, because a lot of people, like smaller investors, are going to consider Airbnb, or even smaller one who have a consortium of assets for that. How would you feel about the Airbnb future in Japan? And then, what do you think the outlook of it?
Sure. I think if for smaller investors, I think there are two ways to look at it, and I suggest these two schemes. Number one is to buy a residential building, but make sure that it's in the right location with the right zoning. And if that checks all the boxes, it can be actually operated as an Airbnb 365 days, or it could be converted into a simple lodging, which effectively is a hotel. Under that scenario, it could be leased out to an operator, or the operator can give you, let's say, pay a rental which is at or slightly below market, but with an upside option to it. I think that's the best way to work on to improve the yield or to improve the investment return for a small or ordinary investor. The second way to do it is to do, let's say there's a building of, let's say, 8 floors, right? Maybe the first floor to the third floor, you do a service apartment or Airbnb. By service apartment, I mean operating it out for, subleasing it for 30 days. And then for the top floors, you have this fixed, reliable income that you're renting out to the ordinary Japanese family or salary person. Then that way you have diversification of income, and you also have upside. If the service apartment operator or the Airbnb operator generates extra alpha.
I see. So I think you cover a lot of detail that I wasn't expecting to, because it's like, these are things that like no one really realizes, that like you have to understand the asset, how you work, the location wise, and then even like residential building can be work with different kind of asset class if you understand what's going on. So even when it's conversation with you, I know you know your stuff really well for that reason, So, and then a lot of, for the audience that might want to participate in Japan real estate sector, right? How would you suggest them to participate, for small investors and large investors? And then, actually one thing that I was always curious is that a lot of people think that it's a bit too late to get into the game at the moment, because Japan before was a huge boom and then things are still going well long term. Do you think it's just your potential, or is it too late to you?
I think, I answer the first part first. For small investors, I think if they're buying units or apartments themselves, then they should look at core central locations. Don't just chase yield in the middle of nowhere. Because as I said earlier, Tokyo, Osaka, Nagoya, those places' population has been increasing over the years. So the safe bet is probably going to be in Tokyo. And it's going to be in the main 5 wards, which is Chuo Ward, Shibuya Ward, Shinjuku Ward, Minato Ward, so on and so forth. Focus on those locations. And don't buy assets that are older than 1983 because of earthquake regulation. And make sure that you buy freehold land and freehold property, I should say. And from there, basically you have 2 strategies: rent it out long term to somebody, or you can enhance that return by talking to, let's say, a hotel operator, service apartment operator, or an Airbnb operator, which of course I know people that are doing that. That's one way to do it. For big guys, I think that depending on how big, right, Darryl? I mean, big guys, I think looking at residential, offices, hotels, I think it's the same story there. I think those are all attractive assets. If you have a lot of capital, then maybe logistics. But I'll probably stay away from retail at the moment. And it's a similar story in the US, whereby you have the Amazon risk or the e-commerce risk, right? And secondly, valuations are not that cheap. Yeah. The second part of your question is what? Big and small investors.
Yeah, no, well, do you think it's too late when you have to go in, or there's still a lot of potential for the market?
No, I think there's a lot of potential. I think one important point to highlight in Japan is that most of the capital flow in terms of property transactions are driven by local corporates and also by pension funds and J-REITs. And they account for around close to 60% of all transactions in Japan. So as a small investor or a high net worth investor, you don't really move the needle because these are the big guys that are buying for stable cash flow reasons or for tax reduction purposes, right? Therefore, there's always a pocket to look at in Japan, and the goal for us, at least at Pegasus, to sell to one of these guys have to do the value up or the value adding, right? For investors that are looking at Japan early on, then I think it's important for them to understand that the person that you sell to is probably a Japanese person, not an international investor. And secondly, you also can consider the Japanese low cost of funding. That's going to continue for a long time.
I see.
In my opinion.
That's good.
Yeah.
I only have one more question because it's something even like I'm just curious, right? Like, what are some projects you're working on and an opportunity that you're looking in the moment?
Sure. I think in real estate investment, you can break down your risk and appetite into several buckets. You got the opportunistic bucket, obviously, and then you have the value add. Then you have core plus, which is just normal rental with a bit of tweaks. And then you have core investors that just want stable income. In a COVID environment, I think it's important for us to, if we're deploying capital in a risky environment, then we should be more opportunistic, very naturally. And in this market, the most opportunistic assets, I think, are going to be hospitality related assets. And that's where we're seeing the biggest discounts. At the moment, we are looking at projects which are probably going to be discounted by 40, maybe 50% by sellers across the board. It could be a fund that has reached maturity. It could be a developer that has borrowed too much money and they need to release capital for the next project and so on and so forth. Guys like that, right, that we're talking to at the moment. And we believe that buying at around 30 to maybe 50% discount to what it used to be is going to be very attractive, considering what I just said about the future, tourism trend. Maybe 2 years, maybe 1 year, maybe 2 years, maybe 3 years down the line, it's probably going to recover from what it is now. And if our hotel operating business is still profitable at a 20% occupancy, you can assume that if things go back to 50, 60, 70, how much of a margin that we can make and how much of capital gains that we can achieve by buying at this moment right now.
That's huge. I mean, 30%.
Yeah.
Holy crap! That's a huge number, actually. If you can pull it off.
Yeah, it's not bad. And I guess I forgot to say, and we're not really looking at like in the middle of nowhere. I'm talking about Tokyo, like 100-room hotel in Tokyo. I'm talking about 150-room hotel in Kyoto. I'm talking about a development project in the middle of Namba, smack in the middle of Osaka. And these are things that are really exciting. And it was something that I had difficulty, sourcing or buying like 2-3 years ago, because there was so much, nobody's willing to lower their prices until, recently.
I see. Well, so obviously, I think that I think there are so many things that I want to ask. Like, there are so many questions in my head. For example, like different asset class, it can be industrial or other property type that you see interesting, or
Sure.
like a location and so on. But I'll wait for next time then. And then for people who want to reach out to you, talk to you more about Japanese hotel, Airbnb, residential, how would you suggest them to find out you and talk to you more further?
Yeah, I think they can send me an email at perry.tan@pegasus-cap.com.
That'd be cool. Oh, well, obviously, I will include everything in the show notes. And then I want to say thank you for your time, because it's something that even for myself, I'll always be so curious. And a lot of people in Hong Kong or other places will be also appreciate your insight sharing as well.
No, my pleasure. My pleasure. I hope you're doing well, by the way.
Hopefully. We'll see. Yeah. But thanks for your time and see you next time then. Thank you.
Okay. Take care.
Bye-bye. Thanks for watching. What do you think of this episode? Please let us know in the comment below, and be sure to hit the subscribe button to keep in touch with us for upcoming videos. But before we go, I want to give a big shout out to Patina Design Lab. They're the one who help us in making our brand, art direction, as well as these videos. They are a strategic design consultancy firm to help businesses with a wide range of design services, from industrial design, branding, graphic design, art direction, content creation, and many more. They are a very talented bunch, and I urge you to check out their website for their work. That's all for today, and see you next time. Cheers.